Good evening, everyone. Thank you for joining us today on a Saturday evening for what will be a very interesting session on ETFs, the future of investing. During the session, audience can post questions in the comment section, which will be taken in the second part of the webinar. For this session, we have experts from two firms who are very bullish on the ETF market in India. Mr. Swaroop Mohanty, CEO, Mirae Asset Mutual Fund, and Mr. Vasant Kamath, CEO, Small Case Technologies. I, Siddharth Srivastava, Head of ETF Products for Mirae Asset, will be moderating this session. Thank you for joining us, Swaroop and Vasant.
Thank you, Siddharth, for having us.
Thanks, Siddharth.
Getting started, since the topic of discussion is exchange traded fund, my first question to both Swaroop and Vasant is, why ETF is good investment option for an investor? Vasant, if you can take this up first.
Sure. So exchange traded funds are many things, but how to define it, it's compared to other instruments that are traded on the exchange. An exchange traded fund is a collection of different stocks or different securities together, and it's traded together. Hence, it's a portfolio by design. So that makes it diversified and a lot less riskier. That's obviously the first advantage. Other advantages include, usually ETFs in India mirror indices. So, for example, a Nifty ETF mirrors the Nifty index and tracks, the performance as well as the movement of the index itself. Similarly, the gold ETF, kind of tracks the gold prices. So, what you expect is what you get. There's no, fund manager taking their own calls, trying to basically, time the market, have their own views in the fund management. Hence, if Nifty moves up by 2%, your ETF that you've invested in also moves up by 2%. So what you see is what you get with ETFs. Another big advantage is they're traded on the exchange, so they're liquid. You can buy a Nifty ETF, for example, in the morning. You can exit it just before the market closes, and you'll basically get the advantage of the price movement in the day compared to mutual funds where that happens after the market. And compared to even other instruments, there's a very low minimum investment amount here with ETFs. For example, Mirai's Nifty 50 ETF, you can start investing in from rupees 100, or even a gold ETF, for example, it starts at rupees 40. Obviously, there's other advantages like the expense ratio being low, but prima facie, the advantages that an individual investor like you and me gets with an ETF are these. Swaroop, you want to throw some more light?
Swaroop, your thoughts on this?
Vasant, I think you've put it down very well. And I do believe that, globally investors are buying into ETFs due to its transparency, the tradability, lower fees, of course, and in some cases there are good tax efficiencies. But, as markets become more and more efficient, it does become a little difficult to outperform markets consistently. We've seen that happening in developed markets, and we are observing that already in some of the pockets in Indian equity markets too. In such markets, ETFs, as Vasant rightly said, which simply replicate the underlying portfolios of, say, market indices like Nifty 50, give you, that market segment returns, and it does make a lot of sense. It neither tries to outperform or underperform the market index, so no active management is involved, as Vasant put it very nicely, and you cannot take away the cost advantage too. The ETFs are based on index and with a known methodology. You can take a focused exposure in a certain market cap or sector or theme or a strategy, and we will see that strategy part evolving as the market sort of matures. There can be a long-term as well as a tactical sort of approach to investing. So it does give a lot of flexibility. And the most important part, which, each to his own, some people can actually get in intraday and get out it. And then these flexibilities do not come on the active side. So together, it does make a very strong case to be part of a portfolio.
So, Vasant, apart from being a low-cost investment option, what are the various uses of ETF?
Sure. So I think that's what one, obviously being low cost, but the other is that you can start out with a very low minimum investment amount. As in, for Nifty, you can start out at rupees 100, for gold at rupees 40. different ETFs have very low NAVs or prices for an investor to get started with. So that obviously makes it a lot more accessible to individual investors. It's a great building block for your portfolio. Like we just talked about that, an ETF mirrors an index. So there's no ambiguity about how your ETF will kind of do versus, when the markets are moving up, your ETF also goes up, and the markets are kind of not doing well. Also, your ETF does not do well in the similar proportion, which means that when you're building out a portfolio, ETF should be one of the first building blocks that you kind of use. It's also kind of, a great way to actually start building out your asset allocation. For example, say if you want to take equity and debt exposure, there's a thumb of rule that obviously if your age is X, 100 minus X is how much you should put into equity. So that equity component can be put into, say, a Nifty 50 or a Nifty 50 plus Nifty Next 50 ETF, so that you get exposure to the top 100 stocks. The rest can be basically put into a fixed income based ETF, and together that builds like a portfolio where you start with, and then you can continue building your portfolio over time as well.
So, Sarup, for a mutual fund investor, where does ETF fit in his portfolio?
Yeah, Siddharth, there has been a lot of discussion on ETFs as an investment option for some time now. It's been a debate between active fund management and alpha creation versus cost till now. I don't believe that, when we look at investments, the cost should take center stage. The product always it should take center stage. And then you go back and look at cost advantages. Going forward, I strongly believe that it cannot be just an active or a passive story. From this year, and I've said this in the past too, that from this year, it becomes a combination of active and passive together. I do believe that the combination of the two can add to a great strength in the portfolio. India will continue to have active alpha generation potential for fund managers, but at the same time, the efficiencies which the ETFs bring to the table can become a perfect combination to form a strong portfolio. I think Vasan sort of brought down the asset allocation part, so I'll not go into that much more. But we think from a long-term perspective, an investor should start allocating some part of the portion which were inactive into the ETFs, especially in segments where he wants to take a more focused exposure, where it's clear, say, like a large cap or whatever, should start allocating more. And ETFs, as you rightly pointed out, can be used for short-term tactical allocation too, towards, say, any part of the market on a future outlook, or can be based on through good advice, can be taken as a tactical exposure also. So it is no longer active versus passive. It is now active and passive, and together the combination can form a far stronger portfolio, is what I've realized over the last few years.
So the total size of global ETF industry is around $5.6 trillion. In US, in fact, the total AUM of passive equity funds overtook the total AUM of equity mutual funds last year. So my next question to both of you is, how can a similar success story be replicated here in India? Sarup, can you share your thoughts on this first?
See, Siddharth, a product can have two types of startups. One, when a product comes to the market, catches a lot of attention, say has a wow factor, and it takes off immediately. Then such products, it's up to those products to sustain that wow factor perpetually, to retain that sort of growth. Invariably in investments, we've also seen some products like that. But we've also seen many of those ideas having started well, but in the long run, they found it difficult to sustain. What has sustained, according to me, over a period of time are structurally strong products which build strong track record, and then there comes an inflection point for such products. Let's look at the active mutual fund market as an example. I mean, we started when in 1965 with the UTI schemes. It took us 35 years, from 1965 to 2001 to hit the first 1 lakh crore AUM. 35 years. In the next 6 years, in the next 10 years, we added another 9 lakhs. That is, the AUM went to 10 years. But in the last 6 years, we've added another 15 lakhs to take it up to 25 lakhs. I see that happening to ETFs also. It is now no longer a product sitting on the fence. I feel the first phase of the product is just about completing where the industry now has a set of very strong core products and is already venturing out into forming some tactical products or with decent track record. Okay. And I feel we should see the approach changing completely from this year and especially in the next 2 years. We will see that happening. As I said earlier, it is no longer a passive or active story. It's a combination of both. And when you look at that story globally, say I'll give you Mirae Asset's example. We started in 21 years ago as an active long only fund. Today, if you look at our global assets, 26 or 27% of our assets are now ETFs. Here we are Mirae Asset, known for being an active equity fund house, now participating in an ETF show and have full intention of putting together a proper ETF business. But it's no longer whether that is good or this is good. This is a strong product and it will feature in everybody's portfolio. Once that happens, the inflection just takes off. Yes, we are in that cusp of that, is my view.
Vasant, what are your views?
Sure, Siddharth. No, completely agree with what Swaroop has said. Obviously, a lot what you mentioned about how passive, the split of passive versus active in AUM in the US has come to a 50-50 from, I think 7 to 8 years back, it was around 15 to 20%. From there to grow to 50% has been very quick. Like Swaroop said, the obvious first reason that you can see for that is obviously the merit of the product itself, where ETFs are transparent, they're efficient, they're low cost, they can be put together to build many kinds of portfolios according to your objective, according to your risk profiles, according to your goals. So I think that's something, while we are all trying to do this together, where we build awareness about this product, what the advantages are, and education among the retail investors definitely has to grow, because once they understand the two things: one, obviously, why the product is more beneficial or good to have in someone's portfolio. At the same time, they understand different use cases in which they could use this product. I think participation as well as interest will automatically take off. But to add to that, obviously there's a lot that the industry itself should do to obviously kind of grow this. Like obviously Swaroop is kind of putting all a lot from a lot of resources, a lot of efforts to obviously build Mirae now also as a passive product house alongside the successful equity products that they have, the active products that they have. I think it requires coming together of many participants in the industry, right? From brokerages, the advisory ecosystem has to grow. Obviously, there's been great support from the government as well as the regulator in terms of new guidelines coming out. Like 2 years back, there was this proposal in the budget as well, where some equity ETFs could be now considered under the ATC tax saving budget. If that goes through, again, that will be a great kicker for the whole ETF story in India, for the passive story in India. And even if you see how it's happened in the US over the last 7 years, a lot has happened because of digital platforms. Like, for example, while manufacturers or AMCs like Vanguard, BlackRock continue to build more products, there were obviously a lot of platforms and advisors who took these products in very simple to understand as well as very transparent and kind of accessible ways to the end individual investor. For example, the Betterments, the wealth funds, different advisory platforms. I think that has to happen. I think, like Swaroop said, it's only a matter of time, and I think everything happens together. Looking forward to that happening very soon in India.
Correct.
Yeah, agree with you, Vasant and Swaroop. Vasant, small case is doing a lot of interesting things both on the technology and product side. Can you share what small case is specifically doing for ETFs?
Sure. I'll just summarize for those who just give a brief overview about small cases. So small cases is a new instrument. What we're trying to build here is a way for individual investors, for retail investors, to take easy exposure to portfolios, be it of stocks, be it of ETFs. And we work with a lot of market participants to build infrastructure and technology for them to offer it to them to kind of create and manufacture small cases, or to kind of advise on them as well. So our journey with ETFs is quite recent that way. We are obviously a young company. We've been out there for the last 4.5 years, but our journey with ETF started just 2 years back, actually July 2018, when we launched small cases based on ETFs. Earlier, we had only small cases with stocks as the constituents, but 2 years back in July 2018, we understood that this is something that will start becoming more that where demand will start growing. And our first product was this basket of 4 ETFs, where 2 ETFs are from the equity side, basically represents the large cap segment. One ETF is from gold, one ETF is from fixed income. And the idea was there are balanced funds out there, but what if you could put another asset class like gold, given that you have ETFs for this? So 4 ETFs, 3 different asset classes, and obviously the weightage among them is determined by a strategy in order to kind of maximize the risk-adjusted return. So we call that the all-weather investing small case. That was the first small case that we launched. The next one that we launched was again from customers coming and telling us that why don't we have a top 100 stocks small case where you put all the top 100 stocks together. Obviously, that would be very kind of the investment amount itself would be high for most retail to get into, but that's where we put 2 ETFs together in the right proportion so that people can take exposure. And we've launched multiple such more products like that, right from a mixture of equity and gold, equity and debt, domestic and international markets. We have this platform which multiple advisors and research analysts use to kind of put out their own advisory based on ETFs. A lot of them are doing ETF based asset allocation models to actually take it to the individual investor. With alongside our broker partners over the last 1 year, we've actually built out the auto SIP functionality for ETFs as well. So earlier, kind of you would have to buy an ETF on your own and then keep investing into it to kind of set up a SIP on it. We've built kind of an auto SIP functionality with some brokers rolling out with all other brokers. And one of the recent products that we've built, similar to kind of payment gateway, we built it kind of with our broker partners. Something that Mirae has just kind of started using as well is the small case gateway, where you can enable ETF transactions on the AMC site itself. So a lot of things in the future as well. But like I told you, our journey with ETFs has just started. Looking forward to what more we can do with the industry as well as for the investor.
Yeah, thank you, Vasant. That was very insightful. In fact, the entire ETF community now looks at small case to see what new they are coming up with. And we hope you come up with more innovation in this space. We need it to make it more convenient for the retail investor, especially.
Absolutely. So that the team is all raring to go.
Saurav, can you please share why Mirae believes in ETF products and what it is doing differently in this space?
I see. Before I come to that, I just was reflecting on Vasant's story and see when he's put some things which are in front of an investor, and it becomes so compelling. The basic ideas of behind each small case is catering to products and investors across the risk profile, right? And that's when an inflection point comes, and that's what I was discussing earlier. And what they have done, and it didn't look like a journey of just 2 years. It's such a massive progress in such a short time. Wasn't incredible, I must say. It's very, very impressive, and like Siddharth rightly said, we are all looking forward to what you'll put on the table next. From our perspective, that as an organization, and it's just not India, and I must say this from a global level, we are extremely bullish on ETFs. Globally, Mirae Asset now manages over 365 ETFs with a total AUM of more than 32 US billion. At Mirae Asset India, we are approaching the ETF business from two aspects. Firstly, we are focusing on offering niche ETF products, which will cater to different themes. And that's where the differentiation will come. Strategies or segments of different markets. And that's where you can, I was talking about complementing the product, and you can combine active versus with passive to form a better product. We want to give that investor the choice of investment across multiple themes and strategies. And that, I think, Siddharth, both you and the entire team are working on it very, very aggressively. And Vasant will come back to you and showcase some good strategies to you and the market in the near future. Secondly, we want to improve the investor experience when it comes to investing in ETFs, and that's very critical. In order to reduce cost of transaction and providing the fair pricing on ETFs, we have our own sister concern, Mirae Asset Capital Markets, which does the market making for our products on the exchange at a very low cost, and hence the spread between the real-time NAV is fair. That's one thing which we'd like to highlight from our side. Have also now onboarded you, Vasant Small Case, to provide the real-time NAV of our ETFs on our websites and enable investors to initiate their ETF transactions from our website itself. So for us, this is now a complete business entity going forward. We do not want to get into the debate whether our active side is good or the passive side is good. We are true blue product manufacturers. We will construct products and leave it to the advisor to decide which is a good product for which investor. And from our side, our endeavor will be to build strong and true products on all sides of the business.
Correct, Sanik. Very rightly put that we are the product manufacturer and should be left to advisors to choose the right product as per the risk profile of the investor. So
Correct.
the
And
next
the
question,
plan
I think,
financial plan of the investor.
correct. So the next question is, and I think that's a burning question right now in ETF, is while there is a lot of institutional money coming into ETF, how can we encourage the participation and awareness of ETF among common investors? Vasant, what are your views on this?
I think the first thing, obviously, which something goes very well with the very form factor or the structure of how ETFs work, is that simple is the complete nature of the game. Where how can you make it more simpler for the retail investor to comprehend, to access, and then to continue kind of managing their portfolio with ETFs. So like Swaroop pointed out earlier, markets will get developed in more efficient, and as the market develops in India, it will get more efficient. I think it's up to the entire chain in the product life cycle itself, right from the index manufacturer to come out with more indices that are more kind of that appeals to the individual investor, to asset managers like Mirae to kind of take those indices and build products on top of that. Obviously also means kind of how advisors take these products, kind of construct portfolios around them, construct plans for the retail investor, and obviously the client at the end has to be aware of this. A big thing that kind of also needs to happen while for the retail investor to invest more into or allocate a larger part of their portfolio into ETFs is that demat accounts are obviously required for ETFs. You need a trading and a demat account with a broker to invest in ETFs. So I think we've been on that journey, obviously, to kind of simplify the account opening process, and it's been easier now. For example, a big bank-based broker, if you have a banking account with them, now you can open a broking account with them in under 30 seconds because it fetches the KYC from there and helps you open that account directly. So I think more advances, more better technology to help you open demat accounts faster, along with the entire industry participating in how do we take these products from indices to portfolios to the end investor. I think the entire chain has to basically participate in this. Obviously, from the retail investor side, education is important. They need to understand the benefits, but I think it's more from an industry perspective how we come together to basically make this much more accessible for the individual investor.
Swaroop, your thoughts on this?
I sort of echo what Vasant is saying, and from our side, I'd just like to add that yes, the time has come to really start talking more about ETFs, be it through investor education, be it through whatever medium. I think if you look at us, whenever we stand up on any podium, most of our presentations end on the active side, to be very honest. But gone are those days when we could afford to do that. It's not possible to carry that forward, and that's a huge starting point. I have a certain theory, and it's very important that COVID has happened to all of us, because I do believe that from a financial requirement, the need to invest more will suddenly be very different post COVID. That's my personal opinion, and I'm going to back myself on this. But if you look at the history of India, consumption changed with Maruti. I think internet changed with Geo, digitalization changed with Demon, and financial investing changes with COVID. That's everybody is now sitting down and making their expense statements and have realized the difference between need and want, right? And it's a very important step in everybody's life, and with that will trigger everything. Add to the fact that the penetration of a smartphone is a reality, and the digitalization of everything now makes things easier. For some reason there has been a reluctance for people to open a demat account. I don't think that will be a fact going forward. Once that becomes, and some of the numbers Vasant will, I think, say that better than me. In the last 5-6 months have been telling on the number of demat accounts that have been opening, and it's just a process which will change post this 3 months are, and mark my words on this, will just change everything. And then of course add to that the products are also building track record. I mean, let us look at us. I mean, it took us, we started in 2008, Vasant, and I must tell you that till 2013-14, our total AUM was 1,000 crores. Okay, between 2014 and 2020, we hit 48,000 crores. From 55,000 folios, we went to 27 lakh folios. That happened with track record. And that is also underlying, it is happening. People who have invested, suppose these times at the bottom of the market, I believe whenever in doubt, you buy the index, right? And this has happened. And this entire Jacob of the market will be a very telling sort of influence on the progress of ETFs and financial advice investing going forward, and that will unfold. And this is the trigger which came, without any warning, but it will be a very good juncture in the future. This is my opinion. And then what Vasant said, you put all that in place, and it's the trigger that was needed. And I'd like to add that, I think the regulator is also very serious, and you will see a lot of regulatory move coming in favor of ETFs going forward, and you will see that part also very active. Is an opinion which I carry very strongly.
I think very well put that when in by index. I think that really summarizes the entire philosophy of passive investing and why ETF makes sense, especially during these times. So, Sarup, how do you see ETF industry evolve in India going forward? You were just mentioning that there seems to be a lot of support from the regulatory also on building ETF industry. So how do you see the entire ETF market evolve going forward in India?
See, I think a lot of discussion, and Vasant, I mean, you can come in if you want. I feel a little sad when, the entire bulk of the discussion on ETFs revolves around cost. In my last 2-3 years of reading this product or getting to know this product better, the amount of active thinking that goes into building a passive product is not funny. And that is what will happen going forward. I think we ourselves are coming out with some strategies, some stories, some funds which will be completely new in the industry, and those will be available only on the ETF side. Look, and once we build a backend, I'm very sorry. I mean, it's been, not sorry exactly is not the right word. I'm very surprised that a front end like small case did not happen on the active side. I had thought it should have happened long time back. But going forward, it will not be products. It will be solutions which, say, Vasant is providing. Okay, for us at the back end, we build products and the solutions, and providing solutions is key to financial advising going forward, right? And that's something which will happen in a massive way, and that's where will be the strength of this active thinking, which strikes me about the passive business. See, Siddharth, you will agree, being the product guy, that as the cost shrinks, that extra basis points become very precious, and that is where you have to put in more effort to build that good story and keep that story going. And once this comes into the mind of any advisor, any investor, the inflection point just happens overnight. Let's look at Australia or any country. I think I always give Australia as an example because it's followed the Indian story. It's probably 3-4 years ahead of the Indian story, where suddenly the active part was brought down by the regulator and this took off. I don't get into that debate whether the cost will come down or this will be the trigger. I do believe that the product and its track record and the simplicity of this product is the power. And it's just a matter of time that all the digital integration will happen and the ease of buying this product will be at the fingertip. And once that happens, the future is just one way, and we all know what has happened globally. I don't think we will be very isolated from that story at all. It's just a matter, we just round that corner. I have a very strong view on that. I'm not saying that it will be at the cost of active, or I do believe that at the beginning there'll be two different set of investors, and then somewhere they will merge.
Vasant, your views on this?
No, I agree. Obviously, I think what Swaroop obviously says is while there are enough products out there, more solutions need to come in to kind of take it in a much more structured, much more easier way for the investor to access. But what I see going ahead is definitely a lot more managers coming out there, a lot more AMCs and ETF houses coming in to kind of cash in on this. Them also getting a lot more products, as in while what Swaroop said is completely right in the sense that it has to happen from the product to the investor level. I think having a large menu of products also kind of builds a brand around that, builds an appeal around the ETF product class itself. For example, like in the US, Jets is being touted now as something to invest in. Like, I'm sure a lot of people didn't know what ETFs were, but once they understood Jets and then they understood ETFs, that's where they started looking at more ETFs. There are more indices than stocks in the US now, and obviously hence more ETF products as well. When COVID broke out in the US also, like the kind of ETFs that got launched, YOLO, work from home ETF, such things will obviously create that kind of hype in terms of investors wanting to know more about this sector and obviously then participating into it as well. So I think, that's for sure going to happen. A lot more fund houses are going to come into this industry. They're going to bring about a lot of new products that represent different asset classes, products that represent different themes, indices, and lot more differentiation in the entire product menu itself. And I think, that's something that will also kind of at the same time spur on the solution providers, like for example us, different advisors, different brokers, to kind of take that to the investor in many different and interesting ways so that they can educate.
Correct. I'm like, there has to be a convergence of a lot of things. Obviously, products should be, there should be more products in the market which are catering to different themes, strategies, which gives investor the options to take different approaches in the market. Obviously, there should be convenience for the investors because of liquidity and the transparency in terms of pricing. And also, as Vasant and Swaroop already mentioned, that there needs to be a solution as advisors take up these ETF solutions, like model portfolios, which are based on ETFs, which small case specializes in right now. I think ETFs will gain more and more traction in the Indian markets. So finally, we would like to know what are your future plans in this space. Vasant, can you share your thoughts first?
Sure. Like I told you, something that we've done over the last 6 months is we have started working with our different broker partners to kind of enable auto SIPs happening on ETFs, because generally, the way to invest in exchange traded products, be it stocks or even ETFs, was that you buy and hold it or buy and sell it. But then how do you build, a simple way for people to continue investing on a regular basis, be disciplined towards building long-term wealth? I think auto SIPs make a lot of sense. That's obviously changed how, the mutual fund industry has grown. I think, that's what we're trying to kind of mirror here in the ETF industry. So getting auto SIP functionality on as many transaction platforms as possible, that's something that we're working on. Different order types so that, the impact cost or, when you're placing an order for an ETF, how close can you get it to the actual real-time NAV for it, so that you're not impacted by any spread issues or liquidity issues at that point. That's something that we're working on again together with obviously Swaroop, Siddharth, and team to kind of get that to the individual investor. There's a lot of interest that we have started seeing from not just advisors or advisory platforms, but even platforms that have only been looking at mutual funds till now, because they clearly understand that like we just talked about earlier, that it's not about active versus passive. It's about what's the right blend of passive and active in an investor's portfolio based on their goals, based on their profile, based on their plans. So a lot of these mutual fund only advisors, people who only looked at mutual funds, have suddenly started looking at how they can basically take ETFs to their end investors, because it's obviously much easier to kind of explain to someone that they're investing in Nifty. Obviously, Nifty is a well-known term, or Sensex is a well-known term. It's easier to say invest in the Nifty versus basically saying bank on someone's strategy. Even though they have a brand, there's a fund management style to it. There's a a philosophy to how somebody manages a fund, but it's a lot more easier to kind of take a solution like an ETF or a passive product, an index fund, to the investor to say, just invest in this. This can take part of take care of your equity allocation while you can diversify with your other asset classes. So that's what we've seen. We're working with a lot of distributors and advisors who only earlier looked at mutual funds. Now they're looking at exchange traded products with ETFs as well. Working with a lot of brokerage houses as well as advisory platforms to see how we could have the likes of robo advisory in India on ETFs like it's supposed to be. So a lot on both the tech side as well as the product side. How do we have retirement based portfolios in India like it's there in the US? A lot of things that we look at is obviously the last 7-year journey that's happened in the US, where things have gone from like 15% to over 50% on the passive side, and what were the different events that triggered it. If we can kind of start mirroring the same thing in India, I think that makes a lot of sense, given the structures of how the products are, how the participants are very similar.
I think that sounds very interesting, Vasant. The solutions which you are proposing on the ETF side, I think will definitely make it very convenient and make the entire process very, very transparent to the investor on how, at what level, and how easy they can transact in ETF. So we'll be keenly looking for those solutions to come up in future. So, can you share the future plans of Mirae Asset and ETFs?
See, Siddharth, it's got nothing to do with Mirae Asset or anybody. I'm just talking about the change in environment which will happen in the country. Let's face it, at a fundamental level, two things are happening. One, at the underlying, the demography is changing dramatically. Okay, and suddenly we will become this young country overnight. That's how I look at the change in demography, and that demography will start investing very differently from the way I used to invest. I feel my generation is is the last of that generation which invested in a traditional manner, or the overhang of the previous generation was very heavy on us. But the next generation will break away, and that's something which we have to first acknowledge will happen. If we do not acknowledge that will happen, then we will miss the bus, is how serious this is. From that perspective, I think what Vasant said is absolutely very crucial. What used to be the starting point in equity, being a large cap equity fund or a multi cap equity fund, could very well shift to be that Nifty 50 or the next 50 as a starting point. And let's face it, you're not getting into the debate because one will outperform, underperform. You are just buying the market, as simple as that. So what used to be the first starting point from this is poised to shift to that very quickly, and it will happen very rapidly, because the young today are not technologically challenged. They will have no problems in opening that demat account, and the numbers there are larger than the numbers that are currently existing, and that's where we are poised at, and hence this huge opportunity, right? From that perspective, it is very important, and I think we just completed our first phase. If you go back to the beginning of active fund management, it was in the selfish interest of the fund house to first form the core products, which is the large cap and the multi cap. I see that happening in the Nifty 50 and the next 50. That's my opinion. So we formed those two products to start with. Now the second stage of the business will start, and that's where we would like to get in some exciting themes. We are thinking of course, two sides of the business. One is to get in the products that we have in India and probably blend with our global offices to let's see if we can import some stories from there. In India, of course, apart from the core products, we'd like to get in some niche products like ESG, which is such a huge thing globally, and it's just starting off in India. We are exploring whether we can get it on the passive side to all of you. Some smart beta products once the regulator warms up on that. And then, of course, with the developing market, style and some popular themes, as Vasant rightfully pointed out, which is happening globally. I mean, incidentally, let's look at it. One of the hottest funds from Mirae Asset globally is the Marijuana Fund. And then it's selling, it's such a demand in India already. So many people call me. And if we can bring some of those exciting themes or popular market themes, we would have progressed in our ETF journey, which is our endeavor to put. I think going forward, after you have a bouquet of products, then you can think of giving model portfolio solutions, but that's still that will be probably stage two. Whether we actually will go into that or people like Vasant will provide it, time will tell. I just hope we don't, and it's provided by the market, because that's the right way, is my opinion. But more important, I think, while we go about developing the products, it's very important for all of us to ensure that the investment experience of the investor is seamless. And that's something which we have to invest in, facilities around our ETFs or low cost ownership of ETFs is something, and mastering the product in the form of tracking error is something which we have to really concentrate on, and see that there is absolute transparency in what we do and build a good track record in everything that we do. And once we put that in place, I have no doubt in my mind that at some point of time we will see an inflection point for us along with the market.
So thank you, Sarup and Vasan, for your insights. To summarize the discussion, ETFs are a low-cost investment products which can be used to take long-term exposure in market indices like Nifty 50, Nifty Bank, Gold, etc. But it's not just that. ETF can also be used for short-term tactical exposure. Investors can enter and exit at intraday market levels and benefit from taking focused exposure in various market cap segments, sectors, strategies, and themes of the market. ETF can also be used to create model portfolios as per the risk profile of an investor. Mirae Asset is using small case expertise to publish real-time NAV of its ETF on its website. Investor can also initiate an ETF transaction from Mirae Asset website, which will get executed on the broker platform with whom small case has tie-up with. Mirae Asset also in future plans to build ETF model portfolio, which will be on the small case platform. So we will now be moving to Q&A session. Request the audience to post their questions in the comment section, and we'll try to take as many as we can. So the first question is from Rajesh Singh. I think this is for you, Swaroop. Which ETF would be more suitable for a new investor, large cap, mid cap, or any other category?
See, in today's market, I would definitely like to start with large caps. Let's face it. And this is what we say on the active side also. Some of the companies were not priced well in December, and you're getting them far cheaper at this moment. So one should just, if you're starting off, these are the large companies. When you look at it from a pandemic COVID perspective, the large companies will fare better than smaller ones because of pure size and money power. So the safer bet today would be to start and would be to start with a large cap always, is my opinion. I know Vasant can disagree, but I think the starting point should be the large cap at this moment for a new investor.
No, I agree completely, Swaroop. I think if it's only equity that obviously Rajesh is
Correct.
looking for, definitely large caps to start with. But then if it's not just about equity, if it's about starting their investing journey, I would obviously encourage, Rajesh to look at how they can use different ETFs to basically create a portfolio across asset classes, so that even in equity, even in the entire portfolio, equity is a small is 1/3 at least, so that they enjoy the uh, upside of equity. At the same time, they are balanced among different asset classes as well.
So the next question is from Kiran Sain. I think this is for both of you. If Vasan can comment first, is ETF more suited for traders, or is it good option only for long-term investors?
That's what. So I think we discussed that a little earlier. ETF as a product has merit for multiple use cases. For a trader, obviously, because they can take advantage of the intraday movements with the ETF structure, that is advantageous. For the long-term investor, the advantages include, the low cost, the low minimum investment size, the ability to track an index without having to take on a large investment amount. Uh, and so it's the product fits both types. That's how most asset classes have evolved over time. For example, if you look at, say, real estate, when you started out, you had to buy land, and then you had to buy uh, a house, then you could buy a flat, then you could buy fractions of a flat. Now you can buy a real estate investment trust which is traded on the exchange. I think even the equity asset class has gone through that kind of evolution, from holding physical share certificates to then dematerialized stocks to mutual funds and now ETFs. And as a new instrument comes in, that opens up a lot of possibilities. So I wouldn't say it's better for a certain use case. ETF as an instrument kind of works for many use cases, and both the use cases that he mentioned kind of fit into this.
Sarup, your thoughts on this?
Oh, I'm a traditional old man, so I'm not a much of a trader myself. But if you have the capability to track the market and get in at a time and get out, it's suited for you. But the look at where India is right at this moment, and when you look at it from a 5-10 year perspective, we are definitely poised to double the economy from here, and all that effect will come only in the capital markets, and it's a great product to buy in and just hold on from a long term perspective. So if you have the expertise to come in and get out and you believe you can do it. But I see more merits in buying into it for the long term as of now, because it's just a matter of time when this kind of growth just tapers down. I always say that there is a risk to buying equity and there is a risk to not buying equity, and the risk to not buying equity from an India standpoint at this moment is very large. So both are okay, but I would favor the longer side a little more than the trading part because of where we are as a country at this moment.
I think the next question basically addresses the issue, some of the market issues which are there in March and April. So I think this is for you, Vasant, and maybe then I can also comment. So ETFs are traded on exchange. There's a certain if there is certain huge demand, the NAV can increase tremendously compared to index. So how is it possible to keep the NAV around the rather keep the price around the NAV? So I think this particular gentleman wants to know how well or how can we ensure that the pricing on the exchange is around the real time NAV of the underlying portfolio.
Depends upon two things, I think. One is obviously the liquidity of that ETF as to how many buys and sells are happening on that at the same time. At the same, also it depends on what kind of ticket size you're entering into, that determines the impact cost that you bear. But like I said, that's something that we're looking to do. Obviously, the first step was where we're working with you and team to kind of figure out what the real time exact NAV is for that ETF, and then how do we place a limit order at that NAV so that you get it at the same price as what it's trading real time, versus you having a different price. And that's something in the works. I think we should see it very soon.
Yeah, I'm like very correctly put, Vasant. I'm like, the only thing which I like to add is that market maker, also known as authorized participants, plays a huge role in keeping the price of the ETF around the real-time NAV. So their function is to keep to put the both buy codes and sell codes. Looking at the real-time NAV of the ETF, and once they put those quotations on the exchange, prices usually tend to move around those levels. So it depends how good and how much efficiently these market makers are performing. I think their role gains more are becoming more and more critical in the ETF space, and especially in US, you'll find very sophisticated APs, and in India, we hope so that more and more APs will come into play. So the next question, I'll take it up. It's basically from Sumit Shah. He is asking if ETF declares dividend. Yes, it does. ETF. So it actually depends. Some of the ETF does, some of them don't. ETF tracks the total return index and not the price return index. So most of them reinvest the dividend in the scheme itself, and some of them declares the dividend. There's a question for you, Vasant. What are the charges for small case? If you can take this up.
Uh, there's obviously we work to make it a lot more generic. I think we work with different transaction platforms, different brokerages. So the pricing really depends on where you are looking to buy small cases. Why don't you just drop us a mail at help@smallcase.com and we'll figure out the exact pricing structure for you? Because it's obviously I can't go through every broker here, but then it depends on the exact brokerage account that you're using. So if you can just drop us a mail at help@smallcase.com, happy to answer your queries.
So the next question is from Lokesh Chaturvedi. He's asking if ETF has a static portfolio which changes only if there's a change in the index. So so I'll take it up. ETF tracks the underlying portfolio of the index. Passive names should not be constructed in a way that ETF portfolio doesn't change. In fact, a lot of indices are very dynamic. For example, a momentum based index which tracks these stocks which have high momentum, the churn is very high. And these indices are rebalanced either quarterly or semi annually or an annual basis. So, yes, ETF tracks the underlying index, the constant of it, that's the purpose. But then the index itself changes. It can change very frequently depending on the kind of segment or strategy or theme it is based on.
Siddharth, I'd like to come in here because, I have always objected to the word passive being attached to the product, because the only thing that is passive is the action at the fund house end, right? The underlying portfolio over the years is very active. Not only do the stocks change, the allocation of the weightage of the stocks also change, right? So the underlying is very actively managed, and I think, Siddharth, what we should do is probably over the years show how the index stocks have changed, what have come in, what have come down. Maybe we should look at that communication a bit and say that I don't know why it's called passive. Actually, it's I've never found it passive at all.
Right. I think we should definitely do that. I think it will address a lot of doubts in people's mind that that ETF is very static in nature, and once you're investing in same set of 50 stocks. I think that is not the case. So yes, I think we should definitely address that. One question we are getting a lot is what is the difference between ETF and index funds? So Vasant, I think you and Sarup can both address that. So first, Vasant, if you can go on this.
Swarup, why don't you take a stab? I think that comes closer to where you started from.
No, I think I really don't get into the debate of ETF versus index, because according to me, the pure form of the product is the ETF, and then it should be left at that. And I'm not a big fan of adding some more costs if it is not necessary, because if you are going on one direction, you should go the full hog, is my way of looking at the product. I really don't want to get into this ETF versus index, or what is ETF or index. I mean, Siddharth, if you want to elaborate, you please elaborate, because I'm a firm believer of only the ETFs. That's the way I look at it. Siddharth?
Like, I'll just add to it that these are two different product solutions. It's not about what's better. It's ETF you can trade on exchange. You can trade like stocks. You can take invest at intraday market levels. If a market is 1,000 point downs or a 10% down, the the price at which you will buy an ETF will be at a 10% lower price, right? Unlike index funds, which you can only buy or sell at the day and NAV. In the end, both tracks the index and underlying index. So in terms of composition, in terms of performance, there's not much difference. It depends how much you want to have that flexibility of investing at intraday NAV compared to just simply buying the and being okay with uh, buying the funds at the day close NAV. So, in fact, till questions are loading, one question from my side to Vasant. Vasant, are you an active investor in ETFs? If you do, so how do you do it? I'm like, what's the investment philosophy or investment strategy you follow?
I'm an active investor. Most of my savings are in equities itself, but I'm into both, as in I have a healthy mix of both passive and active in my portfolio. However, the instrument is all small cases to start with, and then inside it is either stocks or ETFs. So I have subscribed to multiple small cases created by different, small case managers, which is where I get my active exposure from. And on the passive side is mostly, small cases that are available on our platform. So have a good mix between, how we generally define it. That's what I adhere to. Basically, we have a philosophy of having a core, having and satellite. So, my core is basically this all-weather small case, which has equity with Nifty 50, Nifty Next 50 ETFs. It has gold in it, and it has fixed income with a liquid ETF. So that's my core. And then in slow-moving satellites, I have smart beta exposure. And I have also created a small case of stocks, though it's not an ETF thing. I've created a small case which has, the top 7 stocks, all the Ritik ones. So I keep sipping into that. And then for my, fast-moving satellites, obviously I kind of, play in with different themes. Specialty chemicals is one theme that I'm investing into. Other than that, obviously, quite bullish on financial services. Created a small case where all financial services stocks are there. Keep sipping into that as well. But for my from ETF's point of view, definitely one thing that I invest in is the all-weather small case, which has equity, gold, and fixed income. And I've created another small case called best of both worlds, where I put 50% into, again, the top 100 stocks of India, 50% into the top 100 stocks of NASDAQ, and all via ETFs.
Sarup, what about you?
Yeah, I think, what has happened is over the last decade in my life is that I'm not allowed to buy stocks by virtue of the regulations that are around me. So within our family, and we have a policy of not replicating a single scheme or any investment process between me, my wife, and my son. So by virtue of not having a demat account, I have stayed away. But my wife's portfolio is completely into the ETF side. So it's a combination of the family, and it's a pool fund, as we call it, at the end of the day. So she is a firm believer of both the Nifty 50 and the Next 50. And I think all her, this entire investment of the COVID has gone there. She's bought into some good levels, I must say. So that's the combination we bring to the table. It's if I'm playing some active part, we'd like her to play the passive part, and my son is invested in very different sort of instruments and funds. So together it's a strong portfolio, I believe. So that's how we've approached investments.
That's great to hear. That also, Vasant, that was very insightful. That you are already investing so much in ETF, especially using the model portfolios. I think
But
we
I
hope
told my
that.
wife that we have to open a small case today, and I think she is going to start doing one tomorrow morning. That's the target. Because you see,
Awesome.
the solution in front of you is so compelling. It's in our selfish interest that we do it. It is as simple as that.
Correct. So
So
I
thanks,
think
Swaroop. Let me know
that.
if I can help with any issues.
If there's any issue, I'll tell you. But I think
Please.
your systems are always up there, so I don't think we will. If you check a Mohanty coming up, you'll know.
Will do.
So that rounds up our Q&A session. Thank you, Sarup. Thank you, Vasant. I think this entire session was very insightful. We hope to see some innovative products and solutions from Mirae side, and the entire ETF industry basically looks forward to seeing more solutions from small case side. And let's hope that we all make ETF industry as successful as it is there in the developed world. So thank you for your time on Saturday evening. Thank you for audience. Thank you to audience for joining for today's session. Be safe, be healthy.
Thank
Thanks,
you.
everyone.
Thank you. Thank
A
you.
pleasure.
Bye.